Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Applied Industrial Technologies Inc. quarterly report. Applied Industrial Technologies, Inc. offers a wide range of industrial solutions through its two segments, Service Center and Engineered Solutions. Key businesses and services provided by the company include distribution of industrial bearings, power transmission, fluid power components, and advanced factory automation solutions installation, modification, and repair of conveyor belts and rubber linings, hose assemblies and related supplies, fluid power technologies, engineered flow control products, and automation technologies, provision of pumps, valves, fittings, hoses, process instrumentation, actuators and filtration, supplies advanced automation technologies for machine vision, collaborative robots, mobile robots, radio frequency identification, industrial networking, motion control, and machine learning engineering, designing, integrating, and repairing hydraulic and pneumatic fluid power technologies, distribution of motors, belting, drives, couplings, and other related supplies. Applied Industrial Technologies Inc.'s stock price has seen a modest increase of over 10% in the past year due to several key factors. The company's strong fiscal first quarter 2026 results, which exceeded analyst expectations, contributed significantly to this growth. Additionally, the acquisition of Hydradyne, LLC and Grupo Kopar have enhanced Applied's capabilities in fluid power distribution and automation technologies, respectively. Positive analyst coverage, including price target increases from firms such as Robert W. Baird and Oppenheimer, has also boosted investor confidence. Furthermore, an expanded credit facility has provided greater financial flexibility for the company, allowing it to pursue future growth opportunities. These factors have collectively contributed to Applied Industrial Technologies Inc.'s stock price increase in the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by strategic acquisitions, organic growth, and segment-specific increases in the Engineered Solutions, United States, Service Center, and Specialty segments. These factors collectively contributed to a significant increase in sales. On the other hand, revenue decline is mainly attributed to a decrease in fluid power segment revenue and unfavorable foreign currency translation. Net income and profit margins experience growth. The company's net income saw a significant increase from $92.06 million in 2024 to $100.81 million in 2025, representing a 9.5% growth. This upward trend is also reflected in the net income per share, which rose from $2.40 and $2.36 in 2024 to $2.67 and $2.63 in 2025. Profit margins also experienced an increase, with gross profit margin (GPM) rising from 29.6% to 30.2%, and operating income margin (OIM) increasing from 10.3% to 10.8%. The net income margin and comprehensive income margin also saw significant improvements, reaching 98.9% and 98.8% respectively in 2025. The reasons behind this growth can be attributed to several factors. Acquisitions had a positive impact on gross profit margin by increasing it by 34 basis points. Additionally, solid channel execution contributed to the increase in gross profit margin. However, higher compensation costs led to an increase in selling, general and administrative (SD&A) expenses, which was partially offset by favorable currency translation impacts. The company's financial performance indicates a strong ability to generate cash from its core operations. With net cash provided by operating activities totaling $119,317 and cash provided by operating activities reaching $145,678, it is clear that the company is generating positive operating cash flow. This suggests that the business is financially stable and capable of meeting its obligations without relying on external financing. The company's debt level and interest expenses have undergone a significant transformation in recent years. Notably, the interest expense has shifted from a gain of $627,000 to an expense of $993,000. This change is evident across multiple financial statements, including page 2, where the interest expense increased significantly, and page 18, which shows a stark contrast between the net interest expense in 2025, $993, and 2024, -$627. Furthermore, page 22 highlights that the net interest expense has risen from $0.6 million to $1 million, underscoring the substantial change in the company's financial obligations. Management's outlook on company strategy. The company's management is cautiously optimistic about the future outlook. Despite the 3-month period ending September 30, 2025 not being indicative of future results, they are focused on executing their strategy through various administrative functions. The company expects a full-year tax rate of 23% to 24% for fiscal 2026 and is optimistic about achieving expected growth through identifying and completing acquisitions, integrating them effectively, retaining and attracting qualified personnel, and accessing capital markets as needed. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company paid out a total of -$31,600 and $1,000 in dividends over the past 2 years, with -$17,383,000 paid in 2025 and -$14,218,000 paid in 2024. Additionally, the company utilized $53.2 million to repurchase shares, indicating its commitment to returning value to shareholders through both dividend payments and share buybacks. That concludes the financial summary for Applied Industrial Technologies Inc. Feel free to comment below, and I will be happy to answer them when possible.